Hello, everyone. Today, I want to talk to you about something that almost every person in the United States has heard at least once: crypto. Maybe you heard about it from a friend who lives in New York. Maybe you saw a news report from California talking about Bitcoin prices rising or crashing. Or maybe you saw people in Miami bragging about their NFTs and digital wallets. No matter where you live, Los Angeles, Chicago, Houston, Dallas, Seattle, Phoenix, or even a small town in Kansas, crypto has become one of the most discussed topics in finance, technology, investing, and even everyday conversations. People say it's the future of money. Others say it's risky. Some people are millionaires today because of crypto, and some people have lost everything. And that's exactly why I'm making this video today, so we can talk like real humans, in a friendly, very simple, very natural way, explaining everything in detail. Whether you're someone who doesn't understand anything about crypto or someone who already knows a bit but wants to understand it deeply, I'm going to break down everything step by step. You will feel like we are talking in a living room, like two friends having a long, relaxed conversation about something that sounds complicated but becomes easy when explained the right way. Before we begin, I want to ask you two questions to think about. Do you think crypto will replace traditional money in the future? And have you ever tried buying any cryptocurrency yourself? Answer both questions in the comments box. I really want to hear your thoughts. Now let's dive into the full, deeply explained crypto conversation style script. Crypto, short for cryptocurrency, isn't actually as mysterious as people make it sound. The word itself tells you two things. Crypto means encrypted or secure, and currency means money. So cryptocurrency is simply digital money that is protected by advanced technology. But let's go back for a moment. Long before Bitcoin or Ethereum existed, people used traditional money like dollars, coins, credit cards, and checks. In the United States, most people use the US dollar USD for everything: paying bills, buying groceries, and saving money in banks. Everything we did was managed by banks, the government, and big institutions. Then suddenly, in 2009, a mysterious developer named Satoshi Nakamoto introduced something that changed the game: Bitcoin, a form of money that doesn't need a bank, a middleman, or any central authority. It was like someone invented a new kind of digital gold, a currency that anyone in the world could send to anyone else without needing Bank of America, Wells Fargo, Chase, or any other financial institution to approve it. This idea shocked the world. Some people in Silicon Valley got excited. Investors in New York started talking. Tech groups in San Francisco started experimenting. And within a few years, Bitcoin went from being worth less than $1 to thousands of dollars. It became one of the biggest financial revolutions the United States had ever seen. Why did Bitcoin become so popular? Because it solved a major problem: trust. Think about this. When you keep your money in a bank, you're basically trusting strangers with your money. You trust that the bank won't freeze your account, won't lose your money, won't shut down, and won't charge too many fees. But Bitcoin was built on a technology called blockchain, which is a giant public ledger, a record of transactions that everyone can see but no one can change. It's almost like a diary that is shared with millions of computers across the world, and once something is written in that diary, it stays forever. This technology removed the need for trust in a single company. Instead, the world trusted the network. Blockchain explanation. Simple way. Imagine a long chain made of blocks. Each block contains three things. 1. A list of transactions. 2. A timestamp. 3. A unique digital signature. Every block is connected to the previous one. That's why it's called blockchain. To hack the system, someone would need to break not one computer, but millions of computers at the same time. That's almost impossible. That's why people say blockchain is secure. How do people buy crypto in the US? Well, there are crypto exchanges. Some popular ones in the United States include Coinbase, based in San Francisco; Kraken, California-based; Gemini, New York-based; Crypto.com, international but very popular in the US. People create an account, verify their identity, and then use traditional money, USD, to buy digital currencies like Bitcoin, Ethereum, Solana, or even smaller tokens like Shiba Inu or Dogecoin. Why are there so many cryptocurrencies? Because after Bitcoin became successful, many developers wanted to improve or expand the idea. Ethereum came next, introduced by Vitalik Buterin, and it allowed not just money transfers but also smart contracts, automated agreements built into the blockchain. That's how NFTs became popular. That's how decentralized finance, DeFi, started. Solana offered faster transactions. Ripple, XRP, focused on international banking. Cardano focused on research-based blockchain. Every crypto had its own identity and purpose. People in the US started seeing crypto as an investment, a way to protect wealth, a digital future, a fast payment method, a technology revolution. But at the same time, crypto also has risks. Crypto is highly volatile. The price can go up like a rocket and drop like a stone. People in cities like Austin, Miami, New York, San Diego, many made profits and many lost huge amounts. There were scams, fake coins, pump and dump schemes, and inexperienced investors got trapped. Why do prices go up and down so much? Because crypto isn't backed by physical assets. Its value comes from market demand, investor psychology. Technology updates news government regulations. And speaking of regulations, is crypto legal in the US? Yes, completely legal, but regulated, meaning people must pay taxes on crypto profits, report earnings, follow KYC, know your customer rules. The IRS treats crypto as property, not currency. So if you sell Bitcoin at a profit, it's like selling a house at a profit. You owe taxes. Will crypto replace the US dollar? Probably not completely, but both might work side by side. In fact, the United States government has already discussed creating a digital version of the dollar called AIC and CBDC, Central Bank Digital Currency. This shows that even the government knows that digital finance is the future of crypto in the United States. Crypto will grow. Blockchain jobs will increase. More companies in California and Texas are already accepting crypto payments. Miami has become Crypto City. New York has many crypto startups. Crypto isn't going anywhere. It's becoming part of our daily life. Why do people love crypto? Because it gives freedom, independence, control over your own money, fast international transfers, no middlemen, global access. Crypto makes people feel like they're part of something new, something powerful, something modern. Final crypto is not magic. Crypto is not a scam. Crypto is not a guaranteed gold mine. Crypto is technology. Crypto is future. Crypto is knowledge. When you learn it, you grow. When you don't understand it, you get scared.